Hey YouTube investors, this is Steve, the stock market shark, and today I'm bringing you some very important updates on one of our favorite stock, Tesla. Don't miss this one because this is going to be a critical update in terms of the upcoming performance of the Tesla stocks. So Tesla bears and Tesla bulls, please pay close attention to what I'm going to tell you in the next couple of minutes. I'm bringing you facts. I'm bringing you my own research. I've carried out analysis, an overwhelming analysis of the Tesla stock and the company's valuation. And I'm going to walk you through, guys, on my valuation. I'm going to give you an estimate of the intrinsic value of the Tesla stocks based on my opinion. Don't forget that this is just my personal opinion. It's not financial advice, but probably is going to give you a good indication if the stock has still upside potential given the current values. Can the stock still fly to the skies? How much upside potential is there still in the Tesla stocks? Should you offload your Tesla stock, your Tesla part of the portfolio? But before we start the details of the discussion, subscriptions are mandatory, guys. This was just a joke, but of course, you would do me a huge favor if you subscribe. I'm building this community from scratch, and it would be very important to have as much backing behind the channel as possible. So this is quite critical feedback for me that what I'm doing, it makes sense and it would be worth putting some more energy and putting some more of my time into researching one of our favorite stocks and bringing you the updates, giving you stock valuations, market coverage, analysis, investment strategies, and so on. So if you like this video and if you would like to see comments like that in the future as well, if you want to hear updates of EV stocks, Tesla, Rivian, Lucid Motors, for instance, in the future as well, then please take a moment, press the subscribe button, turn on the notification bell, and we will see you guys in the next videos as well. So now let's get started and let's get back to the topic of our video, the Tesla stock valuation. I'm bringing you no bullshit, just the facts and real research. Let's get started. Guys, before I walk you through the valuation of Tesla, let's take a very quick look at the stock chart. Let's see what Tesla has been doing in the last couple of months. Of course, past performance is not indicative for the future, but it's very important to know where we are at the moment. And just look at that, guys. The rally was crazy. And the question is valid. Can trees go to the skies? Should the investors step on the brakes? Just look at that performance. Over a 1 year period, Tesla stock has been rallying more than 100%, over 6 months, almost 90%, and over a single 1 month period, almost 30% profit, almost 30% within 1 month. That's crazy. And I think that's a very reasonable question if this rally can continue in the future. I hope my research, my valuation guide would help you guys to figure out the question. And now we are turning to the valuation. So the most interesting part comes next. Bear with me. So to introduce the valuation, I would like to put things a little bit in context and let's see where we start from. So as probably many of you know, guys, Elon Musk has made a very ambitious statement. This was first announced during the 2020 impact report, and it was also repeated in a few tweets coming from Musk. But let's see what this ambition statement it is, and let's investigate if this statement has anything to do with reality. Can this become a real potential in the Tesla's future? Let's see, let's dive into it. The statement that I want to basically analyze is the following. It's taken from the impact report from 2020. The report says, in more concrete terms, this means that by 2030, we are aiming to sell 20 million electric vehicles per year compared to 0.5 million in 2020. So from 0.5 million in 2020, they want to reach to 20 million in 2030. So that's basically the planned trajectory. That's the very ambitious plan that Elon Musk wants to achieve. And this was basically reinforced in a couple of tweets later on as well. So let's see these ones. So this is this very important tweet from Elon Musk that I wanted to show you guys. Elon says, or Elon writes, 7 years for sure, 30 million plus new fully electric vehicles per year, 6 years maybe. 5 years is possible, but unlikely. An extra year makes a giant difference when it comes to exponentials. And this was slightly misinterpreted by the market at first, because the market thought that Elon talked about the output for Tesla in 2030, and he referred to 30 million plus vehicles. And then he made a correction. So he's saying in another tweet, that's the total market, not all Tesla. We do see Tesla reaching 20 million vehicles per year before 2030, but that requires consistently excellent execution. So as you can see, what they are targeting is to reach 20 million vehicles for Tesla in 2030. That's the very ambitious plan. And now let's break down that plan and let's investigate if this is more than just a marketing statement. Can this have any relation to reality? Can this become the true potential of Tesla? And now I'm bringing you my research and I'm walking you guys through my evaluation. And in the end, I will give you my intrinsic value for a Tesla stock at the moment with the upside or the downside hidden in it. So let's dive into the details of the valuation. So what you can see, guys, on the screen is the current, upcoming, and rumored Tesla factories globally. The orange dots are basically current factories, so those are in production, those are in operation. The yellow ones are planned factories, upcoming factories, like the Berlin Gigafactory, for instance, and the purple ones are rumor factories. So there are some rumors on the market that this will be built, but nothing is confirmed yet. So this is basically just a speculation at the moment. So as you can see, guys, currently Tesla's production capacity is 1,050,000 vehicles per year. And this is basically produced mainly by the Fremont factory and also by the Shanghai Gigafactory. So these two factories put together these 1,050,000 vehicles per year output. I've been doing you a breakdown of the capacities. So the Fremont capacity, the Fremont is the biggest spot in Tesla's output. So they are producing their 600,000 vehicles per year. These are mainly Model 3 vehicles, but they are also producing Model Y vehicles, 100,000 Model Y vehicles, and 500,000 Model 3 type vehicles. Then the Shanghai Gigafactory capacity is around 450,000 per year. And then we have two confirmed factories. You can see it in the table. The Berlin Gigafactory plant capacity is 500,000 and Austin Gigafactory plant capacity is 500,000. Tesla's current capacity, as mentioned before, it's 1,050,000 vehicles per year. And as you can see, the capacities of the new Gigafactories are moving around 500,000, sometimes a little bit below, sometimes a little bit above, but we can take as an average, as an indication, 500,000. Tesla's current market share in the first 7 months of 2021, it's almost 14%. I would like to highlight something here, guys. Just compare this number to the market share in the previous year, in the same period of the previous year, the first 7 months of 2020. Tesla's market share was almost 18%. So basically the company has lost 4% market share within 1 year. And this is basically highlighting a very important decreasing market share dynamics here. And this is a potential threat. So as the competitors are entering the market, as the competitors are growing their EV outputs, Tesla's market share, based on these dynamics, can be expected to reduce slightly from year to year. So this is very important, and this would impact the valuations as well. The annual global electric vehicle sales in 2021 are estimated around 6-7 million units. The year is almost over, so we are almost getting there, but we would be in between 6 and 7 millions at the end of the year. And the annual global EV sales in 2030 are estimated around 35 million. So that's a compounded annual growth rate for the entire market of 27%. And now let's investigate if what Elon Musk said in terms of producing 20 million vehicles in 2030 can be realistic. So if we assume that the total market output in 2030 would be 35 million, then what should be Tesla's market share, given that they produce 20 million vehicles? The result is almost 60%, guys, 60%. So if Tesla produces 20 million vehicles out of 35 million in 2030, that means that the company has an astonishing market share of 60%, which is crazy. Given that so many huge companies are switching from legacy cars to producing EVs, and basically the pressure, the competitive pressure is getting higher and higher in the industry. So I just wanted to put everything in context, but if this statement is assumed to be true, then we also assume it that Tesla would have almost 60% market share in 2030. I leave it to you guys to decide whether this is realistic or not. I just gave you the numbers and the context for that. Okay, and I would like to bring another scenario. What if Tesla would not grow at such a high rate? What if we suppose that it would only maintain the current market share and it would grow with the entire EV market? And it would basically maintain its current market share as well. So wouldn't lose any of it, but it would be at the same level. So in 2030, Tesla would have a 14% market share of the total market. That would mean that Tesla would produce slightly above 5 million vehicles in 2030. I would use this number also in the valuation, but more on that later. So I just wanted to highlight one more thing to determine whether this statement of producing 20 million cars in 2030 is realistic. As you see, the output of 1 gigafactory moves around 500,000 in average. So if we take into account the 2 existing factories and the 2 confirmed ones, the total outputs of Tesla would be around 2 million vehicles. To get from 2 million to 20 million, there's a gap of 80 million. So basically we have to cover these 80 million EVs with new gigafactories. If we assume that 1 gigafactory adds 500,000 EVs to the total output of Tesla, then the question is how many gigafactories would we still need to cover this 80 million gap? And the answer would be around 36 gigafactories. And taking into account that there are 8 years after the company finishes the Austin and the Berlin gigafactories till 2030, then the company should build 36 gigafactories in 8 years, which means a crazy number of 4 gigafactories per year on average. So just to get there, Tesla should build 4 gigafactories on average each year from 2022 till 2030. I leave it to you guys to decide whether this fact as well can be realistic. And now let's dive into our valuation. So here are the numbers, guys. Here is the valuation. I will try to keep this sweet and short, guys, because your time is precious to me as well, and I won't bore you with the details. But for the matter of simplicity, I'm going to use a discounted cash flow model with a projected period of 10 years. And after that, we are going to use a terminal value. Discounted cash flow, for those of you guys who are not familiar with this method, is basically projecting the free cash flows, basically the money flows that the company would generate for a given projection period. And after that, we would basically assume a perpetual growth rate till perpetuity. So basically, that would mean that after the projection period, the company grows with that specified growth rate forever. So this is pretty much it in brief, guys. It's a one-stage projection period because I try to keep things as simple as possible. The experts say garbage in, garbage out. So basically, I didn't want to overcomplicate the model with many inputs. So for this model, we would need a few things. We would need to estimate the free cash flow at the start of the projection period. Tesla's free cash flow currently is 2.5 billion USDs at the beginning of the projection period. We also need the total cash because we are adding that to the enterprise value basically, and we are subtracting the total debt because basically total debt doesn't belong to the shareholders. So we have to subtract that from the enterprise value as well. So total cash is 16.6 billion USDs. Total debt is a little bit more than 10 billion USDs. In order to determine the intrinsic value of a share, we need the number of the shares outstanding. So we would need to divide the enterprise value with the number of shares outstanding. Currently, the number of shares outstanding is 10 billion Tesla shares. And these are the next ones are the most critical inputs in the projection, in the model, basically the expected growth rate. So what do we assume as a growth rate for the 10 years of the projection period? And basically what I'm going to use is the statement made by Elon Musk that they are projecting to reach 20 million vehicles in 2030. That assumes a compounded annual growth rate of 50%. So I'm going to use this as an input for one of our scenarios. And we have to discount back the future cash flows with a given discount rate. You can find this discount rate for Tesla on different websites. I'm going to use 7.5 here. Basically, this is determined by the risk of the shares compared to the total market and the debt to equity structures. So I'm going to use it here. You can find this ratio. It's calculated on many public websites. And then we also need to determine the perpetual growth rate after the projection period. And for this purpose, I'm going to use 10%. So I assume that the company is going to grow by 10% each year forever. Usually the perpetual growth rate is the growth rate of the economy, but as we are talking about an innovative industry, the EV industry, we can expect some premium compared to the growth rate of the economy. And if we take a closer look to big tech companies and the growth rates, the historical growth rates that they've been basically recording over a longer time horizon, we can see that, for instance, the compounded annual growth rate for Microsoft for a 20 years horizon is almost 10%. So that's almost there. But we have even higher data. For instance, Apple's compounded annual growth rate for 20 years is more than 20%. So that is pretty crazy. These companies are able to grow at a very high rate over a very long period of time. And also Amazon is even higher in this regard. So basically Amazon's compounded annual growth rate is almost 25% over a 20 years period. So we would run a scenario when we would assume a higher perpetual growth rate than 10%. So let's switch back to our model basically. For the first scenario, I'm going to calculate it 10%, and then let's see what kind of number do we get here. Based on this calculation, the intrinsic value per share for Tesla is 925.75 USDs. This means a downside potential of 22% compared to the current share price registered during the last trading session. So as I said, this is the starting scenario. I used Musk's projection for compounded annual growth rate and a perpetual growth rate after the projection period of 10%. But let's see what happens if we assume that Tesla would be able to grow at a higher rate on the very long term as well. And let's assume that also Musk's statement would become true. Let's suppose that Amazon's long-term growth rate of more than 20% would be applicable to Tesla as well as a perpetual growth rate. Let's see what numbers do we get here. I call this the super bull case scenario. The previous one was the bull case, and this is going to be the super bull case because all the inputs have the highest values in our scenario analysis. And this gives us a very high number of 1,600 USDs for the intrinsic value of a Tesla share. And this represents an upside potential from the current market price of almost 30%. So if this scenario is going to be real, then there is some considerable upside in Tesla stocks. And now let's switch to the bear cases, because I also brought you two bear cases. In my bear case, what Elon Musk stated, the 50% compounded annual growth rate, it's not realistic. As I demonstrated you guys, there can be some very important limitations to that. So I assume that Tesla would be able to maintain its current market share by 2030. That would be around 27% annual compounded growth rate. So let's calculate with this number and let's see what we get as an intrinsic value for the shares. And for the bull case, for the bear case scenario, I'm going to use the 20% perpetual growth rate and the 27% compounded annual growth rate. The numbers that we get here, the Tesla share in this case is only 334.95 USDs. Guys, I'll leave you a moment to digest the information. Downside potential is almost 240% from current values. So basically, if Elon missed reality in terms of what is going to be the reality in 2030, and they are not able to maintain that growth rate that they are projected, if they are able to maintain only like a much lower growth rate, then the intrinsic value for a share is basically shows a significant discount to the current market value. And this is not even the super bear case, this is just a bear case. In the super bear case, I'm going to modify the perpetual growth rate to 10% only. And in this case, we would get a number of 205 USDs. So this is going to be the bear case. And now let's summarize the results, guys, summarize the results. So this is the result. So we have 4 scenarios. We have a super bull case, a bear case, and a super bear case. My assumption is that most of the investors and analysts are only taking a look at the bull cases. They are just estimating the share price given the most optimistic outcome and the highly unrealistic statements from Elon Musk. And I will show you guys that if we basically want to cover all possible scenarios, we would get an average intrinsic value per share that basically reflects a very important discount to the current price. So the super bull case, once again, 50% expected growth rate, 20% terminal growth rate. Bull case, 50% expected growth rate, 10% terminal growth rate. Bear case, 27% expected growth rate, 20% terminal growth rate, and super bear case, 27% expected growth rate and 10% terminal growth rate. Here are the intrinsic values as we discussed. And basically, if we average them out, then we would get an average intrinsic value per share of 768.98 USDs with a downside potential of 32% compared to the current share price. So once again, 32% downside compared to the current share price. Guys, I think that this is basically that I wanted to walk you through. I think that Tesla shares are basically just reflecting the super bull case. They are just reflecting the most optimistic scenarios. I know that for a lot of you, Tesla is a high conviction stock, and probably I'm not going to be very popular with my statement. I think that basically Tesla at the current price level is massively overvalued and it's definitely a sell. Probably the picture is going to change in the future as the autonomous driving capabilities will add to Tesla's enterprise values as well. But even if we take that into account, I still consider that the 50% growth rate is not going to be realistic. So guys, please share your opinion about this analysis. Please share what do you think of Tesla's fair value. Please share if you're buying the stock at the current level or if you are selling it, or if eventually you're just watching the events from the sideline. Please don't hate me because I stated that for me, Tesla is a sell. This is just my calculation, and I fully respect if your calculation, if your research supports another strategy. I think it would be beneficial for all of us if you shared your thoughts below. So please do so. And I could give you much more details basically behind this research and analysis and my thoughts on Tesla. I would do it in upcoming videos. I just didn't want to compress everything in a single piece of video. So I'm coming back with a lot of updates on EV vehicles. I'm going to shoot a video on Lucid Motors. I'm going to shoot a video on Rivian. I'm going to shoot a video update on Tesla as well. So guys, if you're interested in this content and if you are interested in real research and not just investing bullshit and not just talking up stock prices and talking down stock prices, if you are basically want to see valuations backed up with scientific models, then please subscribe to my channel, as it's only worth for me to continue this journey, guys, if there is some positive feedback. So please make sure that you subscribe below, guys, and I promise I'll be back very soon with additional Tesla and EV updates. So thanks a lot for watching my video. Thanks a lot for leaving your comments below, and I will be back. But till then, enjoy the rest of the weekend. Take very good care. See you soon and enjoy the trading next week. Bye.